Broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to our discussion on how to convert your financials from an accrual position to a cash-based viewpoint in Design Manager. My name is Brad, and I'll be hosting the demonstration today. If you have any questions during the webinar, feel free to enter them into the questions pane under GoToWebinar panel. If the question is outside of the scope of today's discussion, please email them to support@designmanager.com. And lastly, if you missed a portion of the webinar or want to review any of our past discussions, you can go to our YouTube channel at Design Manager Inc., Design Manager INC, and here you can see any of our tutorials, our project management accounting courses, and all of our past weekly webinars as well. Today's discussion will be a combination of both the theoretical and practical, as I'll first review the general differences between accrual and cash accounting, and then how to construct the transaction or transactions necessary to truly reclassify the activity to mirror cash-based financial statements. As the process is nearly identical in Design Manager Cloud and Professional Cloud, I'll be demonstrating predominantly in the Professional Cloud to minimize the distraction of switching between the platforms. But of course, I'll show how to access the appropriate reports and windows in both platforms. Okay, so we should begin our discussion with the accounting model Design Manager utilizes so that we can better understand how the accounts we'll be reviewing shortly are affected by the fiscal activity I'm going to be discussing. As I stated previously, Design Manager utilizes the accrual accounting method, whereby sales to the client and purchases from the vendor are realized upon the creation of the client invoice and the recording of the vendor invoice respectively. It's this concept of invoice as the transfer of ownership of the goods and services through the design process that fundamentally powers the accrual accounting engine. Conversely, in cash-based accounting, the sale is recorded when the client pays you, and your purchases are recorded when you send payments to the vendor. Let me elaborate. When you record a client deposit or retainer in accrual accounting, the amount is recorded into the client deposit liability account. This allows you to maintain your working capital without yet recording revenue, accruing sales tax, etc. In the cash-based accounting, the moment you receive those funds, revenue is generated, sales tax is accrued and you're going to be liable for, etc., even though the actual sale of the goods and services may be weeks away. Likewise, in accrual accounting, when you send your vendor a deposit, that activity is recorded in the vendor deposit asset account. You're providing funds to the vendor as an act of good faith and to ensure the order begins to be processed, to provide the vendor with capital themselves that's going to be necessary for their order, etc. But in actuality, nothing has truly been purchased yet. When the vendor sends you the final invoice is when the true transfer of ownership occurs and the cost is recognized. In the cash model, the moment you send any deposit, cost is accrued even if the order is in process and may never come to fruition. Now, speaking of vendor invoices, when you record a bill from the vendor in accrual accounting, the cost of the goods and services goes into the work in process asset account, and it's going to remain there until the client is invoiced for that good or service. Thereby, it unifies the accrual of the revenue and the cost into the singular event. And that prevents huge fluctuations in net income that occurs in the cash model. In other words, in the cash model, you're going to be sending out cash or deposits to your vendors, and that's cost. So you're going to have negative income or negative net income, and then you're going to start getting cash from your client. That's going to be huge increases of revenue. So the accrual model unifies that cost and revenue to the point that you actually invoice the client. Now, for more information on accrual versus cash accounting, how to monitor accrual accounting properly, and other related topics, see our webinar, The Income Statement and Balance Sheet Explained, which I recently recorded just a few weeks back. So, if the accrual accounting is the recommended model for interior designers, and it is, why would we want to convert our financials to a cash basis? Well, the most common reason by far is for year-end tax purposes. Many accountants will convert your finances, your taxes, etc., to cash for filing of yearly income taxes. And it makes this particular discussion quite timely, as it's that time of the year to start getting our financials in order to provide to the accounting professionals. And with all of that being said, as you may have deduced by now, we're going to move balances out of the accounts I just mentioned, client deposits, vendor deposits, work in process, along with two others, accounts receivable and accounts payable, to essentially mimic how the same activity will be recorded in a cash basis. Why? Those accounts don't exist in a cash basis. So with that in mind, we're going to actually have to make some accounts to move this activity into. Now, I suggest making new accounts that could be used for the sole purpose of the accounting conversion, rather than using existing accounts. It allows all of the activity to be confined to these accounts and provides the maximum clarity for the accounting professional. So we're going to need two revenue accounts, one for outstanding client deposits and another for accounts receivable, or essentially unpaid client invoices. We're also going to need three cost of goods sold accounts, one for current vendor deposits, one for work in process costs, and a final one for accounts payable, or outstanding bills we have with our vendors. So let's check them out. In the professional cloud platform, you get to your chart of accounts by going to your accounting tab, under the general ledger frame, and clicking the accounts button. Now our revenue accounts traditionally start with a 4 or the 40,000 range, and I have indicated them at the end of my revenues with a 4999, etc. We can see we have one for our client deposit revenue and a second for our unpaid invoices. For our cost of goods sold accounts, again, I use that 5999 designation. So we have one for our vendor deposit cost of goods sold and another for our unpaid costs and expenses. As an example of creating these accounts, for those of you who are unfamiliar, we still have to make a cost of goods sold for our work in process account, as I just mentioned. Doing so is quite easy. Just click your Add button on your account glossary, input a unique account number. How about we use 59997 for our work in process, a name that would resonate with you, or anything that's going to be common and understandable for you and your accounting professional. So let's call it work in process COGS, and simply select the account type. And obviously this will be a cost of goods sold account. Click OK. And then we can see now we have the three cost of goods sold accounts that I mentioned, one for work in process, one for vendor deposits, and one for unpaid costs and expenses. For our Design Manager Cloud users, you go to your glossaries menu, select the accounts at the top, and again, you can see if I look at our revenue accounts, I've made the two for our client deposit and unpaid invoices revenue, and I've made corresponding ones into our cost of goods sold for work in process, cost of goods, vendor deposit, cost of goods, and again, the same for our unpaid costs and expenses. Next, we need to review the current balances for our accounts receivable, accounts payable, work in process, client deposit, and vendor deposits, so we can reclassify the proper amount. Now, in my opinion, I find using the trial balance report is the most convenient method to do so, as all of those accounts are going to be listed, of course, but it also displays whether their balances are currently stored as a credit or debit. And that can be quite helpful for those of us who struggle keeping our debits and credits straight. So if we go under our accounting tab in Design Manager Pro Cloud, we can go to our GL reports. And on our general ledger reports, towards the bottom of that folder is our trial balance. And notice I've already added that to my favorites menu by simply selecting it on the left-hand side of the reports window and clicking add to favorites, so I can access it easy. And then the same for our Design Manager Cloud users. Just go to your reports, go under general ledger, and there you can see the trial balance. And for those users, your favorites are listed on the Favorite Report tab, and you can see I've added the trial balance there as well, along with some other very important fiscal documents or financial statements, the balance sheet, income statement, and the cash flow statement. So let's go ahead and print our trial balance, and let's imagine that we're doing our cash-based conversion for the end of fiscal 2017. My fiscal month defaults to the current fiscal month, so I just need to back that to 12 of 17. I'm going to use the yes option to suppress 0 accounts, just so the report can be a little bit more clear for our discussion today. And here we have our trial balance. And we can see there's our accounts receivable account, our vendor deposit, and work in process. All three of those, again, are assets. And then we can see our accounts payable and client deposit liability accounts. And as I said before, the trial balance is very helpful in this manner because it shows the current balance, either a debit for our assets or a credit for our liability accounts. Okay, now the mechanics of actually reclassifying the activity is quite easy. We're going to input a journal entry to manually move the activity out of the current account into the corresponding transfer account that we just created. Now, we can do this with one all-encompassing journal entry, but I actually prefer making individual journal entries for each transfer for maximum clarity, so the accounting professional can see exactly what we're doing and they'll understand it very easily. So, that being said, we'll make 5 very simple journal entries. Let's go ahead and do so. To make a journal entry in Design Manager Professional, you stay on your Accounting tab, go back to your General Ledger frame, and click the Journal Entries button. On the Journal Entries window, very important, we want to select our fiscal month back to 12 of 17. That way, all of the activity we recorded in that fiscal month. For our Design Manager Cloud users, go to your Documents in Accounting, change your views to Journal Entries and Miscellaneous Cash Receipts, and you can simply select your Journal Entry button in the top toolbar. Okay, so let's go ahead and quickly add those 5 journal entries to transfer our activity. So we'll go ahead and click the Add button and input our information. Design Manager automatically makes an entry number for you. I often change that to something a bit more indicative of what we're actually trying to do here. So let's do our accounts receivable transfer first. So how about we say ADJ AR. The entry date, we'll back that to the end of last year. And the description, transaction descriptions, as you know, many of you know, are optional in Design Manager, though I highly recommend them, as I find them extremely convenient when I'm going to try to review information I may have recorded weeks or even months prior. And it can be something as simple as close AR to revenue. We'll go ahead and click the Add button as indicated by the green plus sign, so we can add our first journal entry distribution, which simply asks us for the account and whether to debit or credit that account. So we'll select our accounts receivable account. And as I said, if we look at our trial balance, that currently has a debit balance of $37,1172. So to get that down to 0 or to reduce it, we would credit the accounts receivable by that account. I'll click my OK Add button, and now we're going to add our second half of the journal entry. Essentially, where is this activity going towards? And that's going to go to our unpaid invoices revenue account. So we're going to be debiting or reducing that revenue account. Why? Well, in the cash model, these unpaid invoices aren't really sales. So by debiting our unpaid invoices revenue account, we're actually reducing our total sales. So if we click OK, we can see that we're crediting or reducing our accounts receivable asset account while we're debiting or reducing our unpaid invoices revenue account. Our net debits and credits is 0, Now I want to simply remember to use the auto reverse option. Auto reverse, well, what is that indicating? Well, we don't want to stay in a cash basis forever. So the auto reverse option is actually going to make a reversing journal entry for me in the next fiscal period, in other words, January of 2018, so we don't have to do it manually. It's basically going to restore our current accounts receivable balance for us. Click OK, and there's our first entry. Very simple. And now let's go ahead and add the next for our vendor deposits. Our vendor deposit account is also an asset account. So again, we'll be crediting that. ADJD, put in last year, and we'll adjust close vendor dep to COGS. And now we'll add our vendor deposit account. Again, that's an asset. The balance there, 1960. Just going to copy that right off the report. And again, since the debit balance currently, to reduce it, we would credit that amount. And now we'll add our second distribution by clicking the OK Add button. And this is going to be that vendor deposit cost of goods sold account. And there it is. And here we'll be debiting that account or increasing it. Well, why are we doing that? Well, in the accrual model, this is the moment that we send those vendor deposits, cash, etc., to the vendor. That's a true cost for us. So we need to increase that vendor deposit cost of goods sold account. So now we're reducing or crediting our vendor deposit asset account, and we're reclassifying it as actual costs into our vendor deposit cost of goods sold account. We'll auto reverse and we'll click OK. Let's get the report window out of here and we'll continue. Add again. And now this is going to be our third journal entry for work in process, which is our final asset account. ADJ WIP, end of the year. And we will close WIP to COGS. So now on our first journal entry distribution, we'll select our work in process asset account. That current balance, again, right off our trial balance, is 15,315. Copy that right off the report. And again, to reduce or lower that, we're going to credit it by that amount. Click OK Add to get to our next distribution. And this again is going to be our cost of goods sold account for work in process. And here we'll be debiting that amount. Again, as accrual-based accounting holds the cost in work in process, so we can record the cost when we record the revenue upon invoicing the client. Not so in the cash model. We need to accrue that work in process as true cost. So by debiting our work in process cost of goods sold account, we're going to be increasing our cost of goods sold. Again, net debits and credits equals 0. Click our auto reverse, and there's our third. And those are our three asset accounts. Now our final two are going to be for our liability accounts, our accounts payable and our client deposits. So we'll go to our accounts payable next, ADJAP, end of the year. Whoops, close AP to COGS. Click our Add button, and we'll select our accounts payable account, which begins in the 20,000s, and there it is. Now, our accounts payable account, if we look at our trial balance, that naturally maintains a credit balance, as do all liabilities. So in this case, to reduce that balance, we need to debit it, which we will. Then we'll go ahead and place that into our unpaid costs and expenses by crediting it. Well, the credit in this case is actually going to reduce that cost of goods sold. Why? In the cash model, there is no cost until payment is made. So our unpaid balances need to be removed. In other words, credited or reducing the overall cost of goods sold. Click OK, and we can see us reducing our accounts payable by debiting and reducing our cost of goods sold by crediting the unpaid costs account. Auto reverse, and we're almost done. And we'll do our final, which is now going to be for our client deposit account. Again, that's a liability account, ADJCD, end of the year, close client, dep to revenue, click our add button, and we'll select our client deposit account. If we look back at our trial balance, there's our account 23,000 for client deposits and even 7,000 in the credit column. So to reduce that to 0, we'll debit the account. Click OK Add, and we'll go to our client deposit revenue account, and we will credit that amount. So in this case, we're going to be reducing or crediting our client deposit account, but we'll actually be increasing our revenue. Why? The moment we get the cash or payment from the clients, that's revenue in the cash model. So this is actually going to increase our overall revenue. Auto reverse, and we're done. And there are our 5 necessary journal entries. And as I always take a moment to review my work, I want to focus on a few things that are most important. 1, our fiscal month. For our professional users, that is where the activity will be recorded on your financial documents. It doesn't even matter so much of the date. Now, our Design Manager Cloud users, you don't have a fiscal month selection, so the date is more than sufficient. I do like to ensure I have the same date, as I'm a stickler for those types of things. I like to review my transaction descriptions. And finally, I want to make sure that they're all being auto-reversed so I don't have to make those backing journal entries in fiscal January of 18. Since it's quite important at this time of the year to have very good documentation of any accounting activity you're inputting into the program, I would select to make a journal. All this is going to do is list exactly each of our transactions, the effect on each of the accounts, and it even has a nice summary. I would print this out and keep it with all of my year-end information. That way, if the accountant has any questions, boom, we can provide this for them. And now all we need to do is post the transactions. And upon doing so, we can see here are all of our adjustments. And if we look, we can see here are all of the auto reversing adjustments that go right into the fiscal month for us. For our Design Manager users, the same has occurred. I've already gone in and entered all of our journal entries, as you can see, just like we did in the professional platform, and they also auto-reversed perfectly for us. Now, let's go ahead and see how these transactions affected our financial statements. Let's go under General Ledger, go right to our financial statements. Let's take a look at our balance sheet as it shows all of these accounts very clearly. We'll do that as of the end of last year, as that was all of our activity was posted into. And we can see our accounts receivable is now 0. Our vendor deposits now 0. Work in process the same. Also with our accounts payable and our client deposits. So we have successfully moved that activity out of our balance sheet accounts because they simply do not exist in the cash model. So where'd they go? Well, they went across the threshold into our income statement accounts. And if we print an income statement for the end of last year, we can see here is our unpaid invoices account. That's a negative value. That's actually reducing our overall sales. Why? If the client hasn't paid an invoice in the cash model, it's not considered revenue. But all of our deposits do need to increase revenue. The second that the client gives us any funds, even if they are simply providing us with a retainer or for goods and services that might not be invoiced for months or weeks to come, it needs to increase our revenue. So if you have a lot of client deposits and very little accounts receivable, you're going to be increasing your sales wildly, which is the opposite of our case here. And then on our cost of goods sold, we can see that our unpaid expenses, this is all of our accounts payable. Since we haven't paid it, there's been no cash, if you would, being transferred. We're reducing that cost, but we're increasing it with our vendor deposits and our work in process. So those two values increase our cost of goods sold. And if we look at our balance sheet as of January, all of that activity is automatically restored for us. Why? Because we use that very convenient auto-reversing journal entry option, which made the entry to put everything back for us on our balance sheet. Very easy. And that's all that we have to do. We're simply taking our accrual model and converting it into a cash-based system. And you can see how however your financials are now, they can have a profound effect or profound change in your overall net income, depending on whether or not your bills, whether or not you have outstanding invoices, whether or not your clients have outstanding invoices with you, your total amount of client deposits, vendor deposits, etc. And with that, I'd like to thank everyone for joining us today, where I really tried to go through and review the necessary transactions to convert our accrual into a cash-based viewpoint. I tried to discuss how I like to make new accounts that may be needed and add a very nice layer of clarity for your accounting professional and for yourself, how to make the recommended journal entries to achieve that conversion. And I tried to show how the transactions themselves affect our balance sheet, income statement at the end of the fiscal year and at the beginning of the next one. And with that, as usual, I'd like to thank everyone for joining our discussion today, and I hope you attend another of our free webinars in the near future. Take care and have a great day.